All right, for this video, I wanted to talk about some new crypto reporting updates that are going to be happening in a couple of years. And I want to talk about 1099s, particularly the 1099K and Coinbase, and how their reporting has changed for 2021. So back in November 2021, Congress passed this Infrastructure Investment and Jobs Act. That's Public Law 117-58. And it's a long bill. It's over 1,000 pages. But in there, they do have some changes that impact the cryptocurrency world, right? And so mainly two big changes. The first one is 1099B reporting. So what they added was a provision that said now companies that facilitate the transfer of crypto between parties, right, a broker, right, such as Coinbase, now have to file 1099Bs for the tax year for the taxpayer's account, right? So if you have an account with Coinbase and you're trading cryptocurrency, Coinbase is now going to have to send a 1099B to the IRS, and you get a copy that shows the trading activity in the account. And these requirements are going to start in 2024. So this provision doesn't go into effect until after December 31st, 2023. So a little time to go, but something to keep in mind in the future here if you do plan to trade crypto several years from now. So the second big one is this 8300 reporting, which is kind of ridiculous, but the Form 8300, it's been around a long time. Effectively what it is, it's an IRS form that says if you're a business and you receive cash payments in excess of $10,000 from one party as a part of a transaction or perhaps multiple, you've got to file an 8300 and report that to the IRS. The changes in this bill have now roped in cryptocurrency payments. So if you're a business and you decide to accept crypto as payment, if somebody, so a client or a customer transfers you in excess of 10K worth of crypto, now the business has to file this 8300 with the IRS to report the amount of cryptocurrency and the information on the payor, right? So who the customer is. And that reporting also starts in 2024. Now, let's talk about the 1099B requirement issue, and then we'll go on to the 8300 on the next slide. So for 2020 and prior, crypto brokers like Coinbase have opted to use a 1099K. So 1099K, it's not the best form. There's not a lot of information on it. Effectively, what it does is just reports the gross sales proceeds on the account. Typically, we see these used for credit card payment companies, PayPal, eBay issues these things out. If you accept credit or debit card payments and you have more payments than meet the threshold, you get a 1099K. Coinbase thought it'd be a good idea to use this form for their accounts, and it was just a nightmare. And so in this example here, you can see kind of how it illustrates how these gross proceeds numbers are calculated. So if we have John buys 5K worth of Bitcoin, he sells it for 4, so he's got a loss of 1,000. And now he's got 4,000 left in his account. He decides he's going to buy Ether, and then he sells it for 1,500. So he's not doing too well here. He's got losses, 2,500 on that transaction, and 1,000 on the first one. So in total, 3,500 in losses, right? So he's absolutely taking a bath on this. Now, the 1099K only reports the gross sale proceeds number. So what they would be doing is taking, okay, what'd you sell it for? 4,000, that's your gross sale proceeds. What'd you sell it for in the second transaction? 1,500, that's your gross sale proceeds. So total sale proceeds of 5,500 is what's reported on the 1099K and sent to the IRS. There's no information on cost basis, there's no information on losses, that's it. So obviously not very helpful. And what happened was it confused a lot of Coinbase users. Their taxes were a nightmare. The IRS was sending out a lot of CP 2000 matching notices saying, hey, we got a 1099 from Coinbase for $8 million. We didn't see any of this on your return. Well, yeah, because that's gross sale proceeds, right? People are day trading crypto. In no way does that $8 million indicate how much cost basis they had, what their actual gains or losses were. So Coinbase said we're done with it. So for 2021, they're not issuing 1099Ks. They are issuing 1099 miscellaneous if you did receive any kind of income on the account, like interest, or if you had some type of fork for a crypto coin, that's income to you. So you might get one of those, but the 1099Ks you're not going to see anymore. So what about the 1099B now? Well, The obligation, again, it starts in 2024. Coinbase might implement it earlier. I don't know. They haven't given any indication. But the 1099B, or the consolidated 1099, is what we see with a lot of brokers. So if you have a stock brokerage account, Robinhood, TD Ameritrade, Charles Schwab, whatever it might be, when you trade on your account at the end of the year, you get that 1099 in the mail, right? So it's a 1099 consolidated, meaning they have a 1099B in there that shows the sales transactions, so your capital gains or losses when you're trading the stock. And they'll also include a 1099 INT for any interest income that you earn, and then a 1099 div is normally also in there for any dividend income you might have received on the account. So ideally, Coinbase will use a full consolidated 1099. That would be very helpful. So it'll show things like the date of purchase, the date of sale, gross sales proceeds from the trade, what your cost basis was in the trade, and then the amount of gain or loss that you have in the account. So a lot of this information, if you log into your Coinbase account, you can download an Excel spreadsheet which shows this info. But right now, none of those details are being provided to the IRS. So when the 1099B comes on board, you should get that. You'll still have access to the Excel spreadsheets, I imagine, but at least the IRS will get the same details that you have, so they can better verify the information that's being reported on your return. Okay, so let's move on to the 8300 reporting requirements. So, 8300, what is it again? It's a form that you file. It's an IRS form, and it's used to report payments that you receive as part of your trade or business in excess of $10,000. So we're not talking about personal payments. If you're not running a trade or business, if a family member loans you $11,000, or they just give you $11,000, that might be a gift, might be a loan, some kind of issues there, but at least that's not a reportable cash payment because you're not operating a trade or business. It's only if you're operating a trade or business. So this form's been around a while, 1986. It was recently revised in 2014, maybe not recently, but 2014 was the last time they made any changes to it. So there's not a lot going on with the form. It's just important that you do file it. So a simple example here, we have John, runs a law firm in New York City, and he has a client that owes him $12,000 in legal fees. That's what's on the invoice. So the client comes in, he says, I want to pay cash, gives John's assistant $12,000 in $100 bills, pays the invoice, that's it, done. Perfectly okay to do that. Obviously, cash is legal tender, so you can take it. But John's law firm now has to report that on an 8300 to the IRS, okay? Now, starting in 2024, same principle is going to apply here if the business is accepting crypto, right? So if the law firm, again, if they get paid in BTC or Ether or whatever it might be, if the payment for those services or goods or whatever it is you're providing in your trade or business, if it exceeds $10,000, you got to file an 8300 to report the payment, the amount, and who the payor was. So your customer or your client. So here's what's odd about these rules. The IRS has repeatedly said that they believe that cryptocurrency is not a currency, even though it's got it in its name. It's just treated as property. So the 8300 reporting is a bit bizarre because it really is only used for actual cash in hand payments. So if I pay a bill by check, if I write a check for $12,000 and then the business deposits it, that's not reported on an 8300. If I make a Zelle transfer or Venmo, not an 8300 reporting obligation. So the crypto thing, this is really just another mechanism to create more paperwork and try to better trace these payments because they think that businesses are going to use them to maybe dodge taxes. That's the only thing I can come up with in this context. So yeah, another disastrous reporting obligation. One more thing you got to be worried about. But yeah, just as an example there at the bottom, Tesla, famously said they were going to accept some Bitcoin as consideration for a vehicle if you wanted to buy a Tesla. They've since discontinued that, but they might bring it back up again. But effectively, they would have to file these, right? So if a customer went into a dealership, said, I want to give you $50K worth of Bitcoin for that car, that's a payment for goods in connection with the business. And so Tesla would have to file an 8300, and it's within 15 days of receipt to the IRS, right? So Yeah, again, it's it's a couple years away, but we're definitely every year we're moving in a direction where there's more filings, more reporting obligations, and of course, if you fail to do these, the penalties are severe, right? Failing to file an 8300 results in thousands of dollars of penalties. So, I hope that was helpful. If you have any questions on these reporting obligations, please feel free to leave me a comment below. Happy to answer any questions I can. And as always, I look forward to seeing you again on the next video. All right, thank you.